Are you one of the many busy professionals working in offices day in and day out? Do you wonder how some people grow their wealth fast, retire early, and play on workdays? Well, you're in luck, because Ginny Bowling hosts this show, Pivot to Prosperity, where she interviews people that can do just that. Play on workdays. Many guests have become financially free. She also interviews people that are on their journey and people that are in support roles, like attorneys, contractors, brokers, and others. Commercial real estate is the common element. She is on a mission to be sure busy professionals know they can own substantial commercial properties too, like apartments, self-storage facilities, and others, and not have to do the work managing them. Passive investing is the key. Syndications are the typical method. Tax write-offs are some of the biggest rewards. Ginny and partners find the deals, build a strong team and business plan, then offer the investment opportunities to passive investors. New episodes are released every Tuesday at 12, so watch for new releases. If you want to get involved, let us know. You need to get pre-qualified to hear about most deals. See the show notes for contact information.
Oh, thanks for being here, Jenny. This is a great opportunity.
Mike seems to have spent most of his life pivoting, he says. I'm going to quote from him. I dropped out of college and transferred multiple times because it didn't inspire me, and I would rather be skiing. I ended up with a career in the ski industry and was a ski school director before age 30. It never paid well. I tired of being broke, so I applied to medical school and got in. I was a mediocre applicant, but my ski school experience helped me ace the interview. Most recently, I burned out on medicine, left at the top 5% private practice, and became an entrepreneur. I am now focused on commercial real estate, retail, and industrial. Have a couple businesses incubating with partners and moved to Salt Lake City. So I ski most days again. All right. What does
So I
this
can
not
ski
say?
most days again. That sounded a lot more exciting when I wrote it, but yeah, I think it's interesting that a lot of people in the world seek stability, and they find their one thing, and they do it for many, many years. And at times I've been jealous that I wish I was drawn to that path of stability when things are hard. But I've more found that I enjoy new challenges and figuring out something new and finding my way through it. And there's a point where I think where once I feel like I've accomplished most of what I can accomplish there, that it's time to find something new and find how to excel in that new endeavor.
So have you done the behavioral test before to find out what sign you are or what it would say about you?
I've done a couple of them. I forget what my DISC assessment was. There was one, I think it was the Myers-Briggs, that said I was a creative problem solver. And I remember when I took that in high school, and I had this idea back then of the way, like we all get this idea of how we're supposed to be. And because I was good at math and science, I was supposed to be a scientist or an engineer. And I think I spent many years trying to fit in a box of who I thought I was supposed to be. And it was years later where I was like, wow, creative problem solver, uh, that's what I enjoy, is finding a difficult problem and trying to find a solution to it that may not be immediately available and isn't going to be a textbook answer.
That's great. Yeah, that's kind of my thing too. But I'm also first and foremost an activator. So I get people motivated. And so I love when I find an issue or a problem, I can get people to buy into it, to either take it on or to support me at least. So usually, I mean, it's like kind of cool. But yeah, no, there's something to those tests, I think. I really do.
Yeah, there is. And I think I wish I would have believed in them more when I was younger and tried to at least explore what they said, and, that finding my own path through that. But anyway.
Math and science. So you got into the medical field and excelled apparently. And you did that 10 years and said, that's good enough. Is that basically it?
Well, I mean, I started medical school. I was 28 when I started medical school, but that was 1998. So it's more than the last 10 years was really the years of big success. Was in a very prosperous private practice in Green Bay, Wisconsin, where we basically did everything. We had great partners who were extraordinarily skilled, and we had a nice arrangement that allowed us to fix a lot of problems and be very, very efficient and very productive. And so that's part of the hard thing, though, when you decide that maybe I'm not intrigued by this anymore and I want to go do something different. But when you've really found the financial prosperity, it makes it hard to walk away from. So it was a process of redirecting out of there.
And, we didn't actually say it, did we? That you were in urology?
Yes,
Did we
yes.
say? Okay,
I think you did. Yeah.
Okay, good. Because we talked a little too much before maybe got starting to record.
Forget what part was recorded.
Yeah,
what part was it?
And that industry has evolved a lot, I guess, too. So you probably had lots of challenges there, I imagine, right?
Oh, yeah. It's, some parts of it, like treatment of kidney stones, you get a little better technology, but I'd say in the last 10, 15 years, there's been nothing dramatic. Where on the other side, where a lot of the cancer care is almost 100% different than when I finished residency. That some of it has changed so fast with new drugs and new protocols, and that it's almost like as soon as you wrap your head around it, it's changed. So that's probably been some of the biggest changes over the last 10 years that were tough to keep up with, and took uh, more of a change where it is more of a team. That there's medicine changes fast enough now that you can't know everything. And so either you do what a lot of the academic institutions do, where everybody is a super specialist and you stay in your one little tiny box, or if you're going to do more, you have to build a team around you, uh, which involve utilizing some very good PAs and nurse practitioners, who they kind of became the super specialist in one little area, um, and were responsible for keeping up with the little detail changes, uh, and especially a lot of the medical care, so the surgeon could keep up with the surgical side, and allowed us to have a very high quality practice in a smaller market. That we couldn't have 20 doctors all doing different things. Uh, we had to cover a little bigger ground, but it was building that team underneath that allowed you to cover a bigger space.
And were you a surgeon actually too?
Yeah, so urologists are surgeons, but unlike a lot of other surgeons, you do take care of a lot more of the medical side. Where most of the cancers that we treat as urologists, we handle almost everything all the way through. Where like a lot of like say general surgeons treating colon cancer, they do the surgical part and then hand it off to the medical oncologist. Um, where a lot of that with urology, we kept in urology, and a lot of even the chemotherapy and those type of treatments came out of the urology world. And that's probably why it kind of stayed in the urology world in a lot of places.
Interesting. Well, and given that our medical industry and insurance problems in the country, did that mean that you ended up getting bottled into or boxed into the office many more hours than you cared for? Or were you able to get out and ski like you wanted all the time, no doubt?
We had a very good organizational flow that allowed us a better for as productive as we were. We had a better lifestyle than most, because we were really, from a productivity standpoint, in the top 5% of practices nationwide. But we weren't working as many hours as the other top 5%, but it was still often a 50, 60-hour work week, depending on your call schedule. And that was really the part that for me in the end was like, I've worked enough years of being on call every third night, of being at the hospital till 7, 8 o'clock at night on a regular basis. Between that and just the frustrations with the way the whole system is administered now, that it was, I'm like, I either need to do this a lot less or do something different. And the way our practice was set up, we weren't able to come up with an option that worked for me and worked for my partners, for me to work a lot less. So we decided it was time for me to exit. And that all came around my younger daughter graduating from high school as the timeline. And so she graduated in May. I exited the practice and we moved to Salt Lake City.
And that was 2 months ago?
That was 2 months ago, yeah. Or a little less than 2 months ago, we made the move. So
congratulations is still in order then. Yes, yes.
well, thank you. It was a big move.
Yeah, yeah. Well, and having talked with you a bit before we started recording, you built up your alternative income sources so that you could retire, right? So talk about that.
Yeah, so it was really a combination of it's funny when you talk, the big thing and the difference between real estate and medicine is in medicine you build a team, but it's a lot more focused, especially as the doc, you're at the, kind of the top of the pyramid. And you're expected, or a lot of the time you're doing a lot on your own, where when you switch to real estate, it really is about the team and your network and those people. And so it really changed for me. There were a handful of crucial people who really helped me realize that, okay, now I do have that changed how my money was working for me and changed my confidence level to say, I can do these deals and I can do them successfully because I have the team around me to keep me from doing dumb deals that go the wrong way, and that all had a track record of, although not perfect, they had a very good track record of making good decisions, seeing problems on the horizon, and building deals that the worst case scenarios were still acceptable. And that made a difference, because that was what really gave me the confidence to make a change and say, all right, I'm going to walk away from a very comfortable income, which still isn't comfortable when you see that change, because my passive income at this point was not at a point to replace my doctor income, but it was on a trajectory to say, okay, it's time to jump ship, because when you work 60 hours a week at one job, there's a price you pay. It's the opportunity cost that you don't have to work on the other thing. And I wanted to make the other thing, the real estate, the main thing. So that was part of deciding it was time to shift.
That's great. That is. And so, as you mentioned, nothing is perfect. We know that the market has been swinging. There were a lot of people with COVID that saw the rent skyrocketing for all those multifamily fans. 20% jump in Florida for the rents in 1 year, in fact. So, and many of the hot spots. So lots of people piled in, and we're doing that floating rate debt, which I explain as the commercial version of what happened in 2008 and 9. That those were ARMs. This was our version in the commercial world of an ARM, the floating rate debt. And nobody expected those interest rates to go so high, so far, so fast. So there's some people in trouble, and it's bound to happen at some point. If you're in real estate very long, there's going to be some losses, but yeah, there's ways to try to contain that risk, and that's what it's all about with the due diligence that we were discussing too. I think that you've surrounded yourself with some excellent people with being able to help you to properly assess that kind of thing. We'll talk about the types of assets that you're into.
All right. Well, yeah, like a lot of people, I kind of started out in the multifamily space or even single family residential, and and at this point, at the time, it felt unfortunate, because when I really decided I wanted to be active was kind of on the back end of COVID, as you said, when interest rates were plummeting downward, prices went skyrocketing the opposite direction. And so right during that time, as things, at least in the markets I was looking at, stopped penciling out, because people were buying at prices that they just assumed would see some continued asset price growth, and that, you could buy a negative cash flowing property, but you'd be okay because it was going to be worth more in 3 years. And that was not the way that I was going to play the game from the beginning. I was looking to build cash flow. And so because of that, it kind of pushed me to look for other options. And that's really where I went from the small market to looking at syndications. And I invested in some syndications early. And it was funny because at the beginning, my criteria were, you don't know what you're doing, and you read the books and you take the courses. But for me, until I really get into it and make the mistakes, I don't learn as well. So I was looking for deals with very low entry points, so I could make my mistakes at a lower dollar value. But through that process, and then I was investing mostly in multifamily and some industrial stuff. But I through that process, I met the people who really changed my opinion on it. That's where the transition to looking at retail and industrial came. And a lot of that was just moving to a place where there was less competition, because it's funny, to a lot of people, it seems like a very mysterious world of how that works, but people are more comfortable buying buildings that people rent and live in, probably because they've done that. Almost everybody at some point has rented an apartment or rented a house. And so that process makes sense to them because they've evaluated it from the renter side. But there's, it's when you change your tenants to people who are business owners, it changes the whole job, and you start dealing with typically a much more responsible clientele.
For sure. And longer term leases, less turnover, lots of pluses, lots of pluses. I didn't tell you, but industrial is my favorite, and always was from when I was an appraiser in the 80s. I think that's the backbone of America, really. And retail's coming back, and in the hot areas it is too. So I think you're in some good markets, and especially Salt Lake City. Talk about Salt Lake City some too.
Well, Salt Lake City is really a hot spot of the country that people haven't talked about as much. There's been a lot of focus on the South, the Southeast, and the Sun Belt. We just moved here from the Midwest, and the Midwest has been recovering too. But Salt Lake has, in the last 10 years, really become a transportation hub. There's a movement. I think that maybe that's not the right word, but the state of Utah and Salt Lake City have combined to do what they're calling an inland port. And that's really because it lies along I-80, the busiest east-west interstate in the country, that also on the busiest east-west railroad in the country. And so there's a lot of commerce that goes through here. And what's that? It's not just with the support of the government, is the amount of building that's gone on as a transportation hub has been sizable. The number of warehouses that have gone in North Salt Lake in the last 10 years is pretty incredible. But because of that transportation, there's more industry moving into, so you're starting to see more and more things made here and transported from here. And then in South Salt Lake, or in the southern suburbs, they now call it the Silicon Slopes, because of the amount of tech business that's been moving into the southern part of the city. So you put that with a very, very business friendly government regulation standpoint from both the city and the state. The area has been growing at an incredible pace, and it's really an exciting place to be right now.
Now, do you have any other geographic areas you're buying in, or is it pretty much right there?
Our main focus is in Salt Lake, because some of my contacts still from my days in 10 years in the Midwest. The Midwest is really a great place right now. The great thing about the Midwest is it doesn't do what you were talking about, how quick rents went up in Florida. The Midwest cycles on a much slower oscillator. It doesn't go shooting up and it doesn't go shooting down. I guess the 70s it went shooting down, but it's a lot more stable, but it's on the upswing right now, especially with a lot of the reshoring post-COVID. States like Ohio with the new Intel plant are doing wonderful. The places, Wisconsin is really on a tear. A lot of the industry that left Milwaukee with the auto industry, that Milwaukee's been turning around the whole Green Bay to Fond du Lac area along Lake Winnebago. They make, what the industry groups there would say, if there's anything in the world you need made, it can be made in this stretch of highway. So there's a lot of great things going on in the Midwest. And the great thing about the Midwest right now is, unlike Salt Lake, where prices have skyrocketed and it's harder to find deals, you've got this great trajectory of the city, but it makes it a lot harder to underwrite, where the Midwest is on a nice trajectory, and it's a lot easier to find deals that work. So still doing some investing there, a lot more so partnerships with some of the folks I've invested with in the past.
So let me take you back a bit to the Green Bay and that reference to the old auto plants and whatnot. Are they being repurposed for the new infrastructure types of whether it's the chips or whatever, or are they demolishing and rebuilding, or what are they doing with some of those old plants?
A little bit of both, depending on the quality of the building.
Uh-huh.
The buildings that are still in good shape are being repurposed. Some of them, like a lot of places, a lot of the downtown areas where they were smaller factories have become lofts and offices and stuff like that. And then some of the ones that were in worse shape have come down and having new things built. A lot of the newer industrial stuff is going up on the outside of town, especially the area from Milwaukee all the way to the Illinois state line, because Wisconsin's a little more business friendly than Illinois. So there's been a lot of growth coming north into Wisconsin along that area. If anybody drives the I-94, I-43, you can see the number of large warehouses and production facilities that have gone in along the interstate there.
Gotcha. Yeah. Are you seeing a lot of data centers too?
Yes, that's a big part there. And it seems like that's everywhere. Every market I look at, it's amazing how many people are talking about, oh yeah, we've got all these data centers. We're big on data centers. So it seems like that's everywhere. It's an interest. I'd have to say
AI
it's a
now.
space.
AI is blowing it up. But
And we're just probably going to see more. It's just increasing computing power, and so we'll just see more and more of that. It's an interesting thing.
I'm trying to follow it. I'd love to get more involved with buying data centers or helping to find the shells and provide some of that service. I used to work for CenturyLink and negotiate access to data centers. And so I get it. I get a lot of it, but I understand it's huge bucks that are being traded there, humongous. So it's gonna just keep going too with AI. I mean, Lordy, when the rest of us figure out how to harness it.
Yeah, it's really an interesting space. It's one that my gut feels like a lot of those have been trading at a very high level, and it's something that I haven't been involved in much.
Yeah,
but it'll be interesting to see where it goes.
Well, like you say, it's good to stay in your lane and get to perfection. I have a little more asset agnostic approach because I was an appraiser, right? So I love several things, and I really am pretty comfortable dealing in those, but it's hard to keep up with several asset types, especially when you've got several geographies too. So yeah, I think you're right to specialize. in say 2 assets and a few geographic locations like you're saying. So, yeah, well, so that's exciting. And so for retail, what kinds of businesses are you dealing with on that?
I look at retail from a couple standpoints. That retail can be a lower cash flowing, highly stable asset, and that would be some of your smaller retail centers, or as traditionally called a strip mall, where you've got 3 to 5 tenants, and if pretty much all of those tenants are national caliber credit tenants with long-term triple net leases, that those almost become like bonds. If you've got a center filled with a Starbucks, an Aspen Dental, and a Jimmy John's, those typically you could either be buying them as a value add to move those types of tenants in, or there's a lot of new construction going up that the new construction, and they'll already be stabilized with those quality tenants. So when you're buying them with the stabilized quality tenants, to me, it's basically, and you'll see your yields on those are typically not a whole lot above, what we've been paying for CDs, at 5 to 7%. So I look at it kind of like the cash flow of a nice bond, but with more upside potential, because there's still room for that real estate to appreciate. And the risk in those is low. Yeah, I mean, I see it as very low, because in the long term, when you're looking at those types of tenants, the chances of it all going belly up is low. And and it can happen with bonds too. Things can go bad. So those are more of a high safety, consistent, lower cash flow with some upside appreciation potential. Where on the other side, if you can find a center that's been neglected, and it happens, and a lot of the time what we're seeing with the demographic shift is, if you find a center that's been owned by somebody for 30 years, or we were bidding on one earlier this year that'd been owned by the same person for 50 years. And some of those, that the owners have been become less engaged as they cross being 70, 80 years old. And they're making enough money off the rents that they don't, they're just kind of hands off, and the money rolls into the bank account and they spend it. And they may not have increased rents in 10 years. There may be a couple vacancies that they didn't even bother to fill because it's still making money. It's been paid off. And so those are the ones that are the great value add plays. If you can come in and find that one that typically will need some TLC, needs the facade freshened up. The parking lot may need some work. We'll need some lease ups done, but that's where the big value add can come. That really, the upside can be buying a center for $3 million and getting it released and resurfaced, and it becomes a $5, $6, $7, $8 million property. So there's a lot.
Yep.
So those are really the two sides of retail. And although a lot of folks feel like retail, took a big hit because of Amazon, right? And because of that, people quit building new retail, and a lot of old retail got torn down. So retail vacancies are actually at an all-time low right now. So
Right.
the retail is doing
Right
great.
here anyway. Yeah. I'm hearing that. It's like, yeah.
And there's spots. You'll find it's not everywhere, but
Right. Nothing's everywhere. Yeah.
exactly.
Location is a thing. Just like one other thing that we were going to hit on, and that is that because we are now looking at probably an interest rate cut, but we've been looking at assets that have been stressed now for several years. where they've run out of interest rate caps and things like that, where there's lots of properties in the red. There's going to be opportunity, as we know, because when there's blood in the street, like we know, that's opportunity too. And but like we were talking about, though, when you get the stars to align, you find that property after the hundreds you look through that don't work, then getting people on board is a real challenge sometimes, because it's been a long dry spell, and it's been a situation where we need to get our people ready and prepared to know when they see something they like, because otherwise they're going to miss the boat. There's a lot of people out there that do know when they want to pull the trigger. So yeah, no analysis paralysis is kind of and I'm being an appraiser from the past. I am so guilty of it myself, but I can't miss these opportunities. I gotta so yeah, we need to be telling our people that, right?
Yeah, it's an interesting thing in dealing with the doctor world. It can be a long haul before they decide to invest. And I know docs have been talking about investing in real estate for 5 years.
10
And
years. Yeah.
yeah, and some will jump in, and it seems like there's some event, and it's probably all of us, that makes us go look for something different. Either you grew up in a world where there was real estate investing, or somewhere where you were exposed to it, and it's always been part of your investment vision, or you're not liking what else is happening in your investment world. And it takes typically a few straws before it breaks the camel's back and somebody's ready to jump in. And so it's really interesting just watching as people flow down that path. Because I got more calls after the recent, was it the Magnificent Seven took their hit in the stock market. That I think, every time you see a drop in your standard asset classes is when I'll tend to see a few people start asking questions. I go, hey, what is it that you're doing? Because,
Yeah.
they felt a little bit of pain on the other side.
So are most of your investors doctors?
That's been our focus. As we've started looking at raising capital, I've had other people who've been listening to my podcast too, that aren't the ones we were targeting, but are welcome to come along. And I think it's more of being a surgeon and understanding the surgeon mindset. And having access to that group is trying to address their concerns and their needs, which everybody's a little different, but at least understanding what they're feeling and what they're talking about. And it's and I understand for myself that you can go from life is good, I'm having fun, I'm making a ton of money, to I'm not having so much fun anymore, and I'm not sure how long I want to do this. And sometimes that turn comes quickly from an emotional standpoint. And and so it's fun. I mean, to talk to the guys who though are further, who have the vision ahead of time, and they seem to be few and far between in the surgeon world, who are like, nope, I see where I want to be in 10 years. So I'm building out this whole diversified portfolio over the next 10 years. And I was like, and you're like, well, I wish I had that much vision 10 years ago. Because I think as docs, you go through many years of spending a lot of money on school and not making money. And then you make all your money all of a sudden, all at once. And all those things you've been waiting for, to have a nicer house, to have a nicer car, it kind of comes all at once, kind of like the college football player signs that first contract, and you go from being broke to having this big cash flow. And it takes a little bit of time to figure out what you want to do with that cash flow. But all too often you end up spending too much of it right off the bat
Yeah.
before you settle in and start looking at the bigger picture.
Well, yeah, and there's a lot of practices I know for dentists and others, the eye doctors, that are getting bought up by private equity.
Mhm.
And I don't know if that's true of urologists too, but then, it might be that you get outvoted and you're in this practice and you don't have any alternatives. If you don't have alternative income to soften that, like what you did, I mean, before you left, you had alternative income streams, then you could be out of trouble, out in the cold. I know a few people that have had that happen for sure. And so yeah, it's always good to be planning to have those alternative income streams.
Yeah, it happens in medicine too. I think there's fewer private practices left. They got bought up by hospitals, over the past 10 years. But of the ones remaining, and we looked at a sale to private equity, and as we started talking to people who had sold, we couldn't find one who was happy with the decision, except for the guys who were retiring and were looking to do a cash out. Um, and a lot of people who went into that it was a great, they get a big chunk of money up front, but then all of a sudden on the back side, it changes the way they practice. And sometimes the enjoyment goes away because things run differently. And it's not always better. That
Yeah.
you want to think, if you're in the private equity world, they're going to make more money. And a lot of the time they just come in and start stripping resources and actually don't make anything better at all and just make it all worse. And the financials of the practice actually get worse too.
So true. And it's funny because that I just was talking to a gal I was playing tennis with, and she was so bummed because her company got bought out by private equity. Her fiance's company 6 months ago was bought out. And so she was really feeling bad. And so I explained to her what I did with real estate. And I said, and guess what? It's private equity and you can do it with businesses. So if you can't beat them, join them. Maybe you want to be investing in these. And so for you, you might want to think about buying up urology companies with some of your peers. Who knows? Because you would know better how to run it than other private equity groups, probably. So
Yeah, and I'm looking at some other ventures though, moving outside of the standard medicine model we've had of relying on insurance and Medicare. And it's that was part of the hassle that was pushing me towards doing something different. So we're from a business standpoint looking at some other businesses, um, and some of them completely outside of medicine too. So
yeah, yeah, it's that time. There's a lot of baby boomers that are not finding someone to buy their business. And yeah, so again, you can do that by syndications as well, right? So
yeah, and some of those are, I don't know, it's kind of exciting to do some. It's amazing how much, when you look at the cash flow and the sales price, your multiples of buying businesses, the less sexy the businesses get, the more sexy the cash flow gets.
so
So
to speak.
so yeah, when you look at things like a commercial painting business,
Right.
nobody ever, talk to the kids who are like, yeah, I want to grow up and own a painting business, but some of those do really well. And the price you pay for your cash flow is a lot lower than boutique medicine practices.
Yeah, I
So
would imagine, right? Yes. Yeah. And it's going to be needed. So,
yeah,
and that
you
can
when
get
you got it.
automated too. So, yeah, there's a lot of interesting. Anyway, so we
Anyway,
need to go ahead and ask you the big question here. Is there a pivotal person or event that has brought you to where you are today or that's pushing you forward to a certain goal?
I would say that the biggest pivotal event, and it's funny because it was kind of an event all at once. Um, there was a while I'd been following a gentleman. I'm going to give a shout out to Ash Patel, um, who is one of the hosts of the Best Ever show and has his own company, Invest Beyond Multifamily. I've been following Ash for a while, and then I got it, and I was on his mailing list that he had started a mastermind, and they'd kind of had informal get-togethers, and it kind of developed into a conference. a small conference, like 50 people, but they're having this conference in Atlanta. And so I signed up and went to the conference, and it was, very informal. So one night we're playing pool, and Ash is like, "So tell me your story." We just met. He's like, "What's going on? What are you looking to do?" And over the previous 6 months, I built this great master plan that I loved of how I was going to build our practice to the point that I could exit in 2 years and leave the practice in better financial shape and leave me in a great place to exit. And so I tell him this whole plan that I'm very proud of. And he goes, "Oh, that sounds like a great plan." He goes, "Why don't you do it in a year? Why are you waiting 2 years?" And so, and I was like, what do you mean? That's impossible. And he goes, "Why? Tell me what you're planning to do in 2 years. You couldn't do it in 1 year." And so it started this snowball. Like, as soon as this whole plan was part of me seeing a vision that I could leave medicine. And it's a hard thing to step over and go, I spent all these years getting to this place, to just walk away. And he's like, and so that moment, there was this change of, it's like, if you can do it in 2 years, you can do it in one. You just got to change the way you look at it. And so that changed my vision. And then one of the other people from the group, he started laughing, and he was like, 6 months. And he kept going, 6 months. And he hassled me about it for 6 months. And so actually from that time until it was less than a year, I went part-time 9 months later, and completely exited. I guess that was 14 months till I completely exited. So it was definitely a pivotal moment. Part of it was his challenge, but part of it was his network and this amazing group of people who then gave me the confidence to know that if I can get a deal through this group, it's hard to get a bad deal through the group. And once in a while, what looks like a mediocre deal, when it's like, when you haven't looked at it this way, well, wait, your leases are wrong, or have you looked at this added revenue stream? What was a mediocre deal turns into an amazing deal. And so really that was one of those moments, was the pivotal moment on my journey deeper into real estate and out of being a full-time surgeon.
Terrific. I should tell you, there's a great book called Be Your Future Self Now, too. Have you heard that?
Yeah, I have. I've seen some other ones like that. I will have to check that one out, because
A good one. I have to
even
remind
if you've
myself.
yeah, and even if you've heard the story, it's great when you go back through these books that in general are telling you a story you've already heard, but there's a little something different. Or I was listening to one recently, and I was like, there was nothing new, but then the check of, am I actually doing these things? Am I just nodding my head like, oh yeah, I know that? Am I actually doing those? And I started to make a checklist, and I'm like, I'm shooting about a 40% here on all this stuff I already know. So it's that's the great thing
That's a
about those
great point.
types of books.
Yeah.
Is you kind of come back and go, oh, maybe that's why my progress is slowed at 40%. You're not killing it.
And that reminds me, I was going to start doing a summary after every book, and I never have done that. But yeah, I go through so many books so fast. I'm probably lower than 40%. Well, terrific. Well, so why don't you tell people how they can reach you?
There's probably the two easiest ways would be from our podcast website, surgeonsyndicate.com, or from our real estate site, which is thefortresscapital.com. From either one, there's a link there to book a call. If you want to call and talk about, being a doctor, talk about real estate, talk about leaving your job, we can talk about all those. If you can't tell, I probably spent too much time talking, and we can just chat it up and see wherever it wants to go with you. There's none of this is a push to invest in anything. If you want to, we've got some great opportunities. We're starting to fund here in the next couple months.
How are you? Okay, yeah.
But
That's the way of the world, right?
It is the way of the world. And it's
It
basically
is.
when you make these great connections, I've now got access to more deals than I have money to invest. And so let's go bring some people along, because I know there's almost all the doctors I know have never invested in real estate. And it changed my life and changed my ability to be work optional. So I'm also out there on social media, but I have to admit that I have trouble keeping up with it. And right now, I have an assistant, but she's running the podcast and other stuff, and so maybe we'll get a social media manager to be able to keep up with the stuff on social media. But booking a call is hard for me to miss that one. So
I tell people if it's important, text me.
absolutely,
Yeah,
absolutely, because
yeah.
even the email, you're like, what? You dig in there and you're like, where'd this block come from? I've never seen, that you get a big flurry of emails. So
Yes. Yeah, yeah, yeah. Very good. Well, thank you so much for coming on the show. I really appreciate it. And I will put in the show notes as well how to reach you. And thank you again.